Hey there, and welcome to This Explainer. Let's just dive right in, because today we're tackling something that gets fundamentally misunderstood out there in the trucking industry. Honestly, I want us to completely flip your mindset today. We've got to stop looking at a traffic ticket as just some minor temporary headache. Instead, it's time to start recognizing your driving record for what it actually is, literally your most critical financial asset as a commercial driver. So we're going to unpack exactly how your motor vehicle record, or MVR, absolutely dictates your bottom line. You know the phrase, it's only one ticket. I mean, I hear this all the time. It's such a common misconception out on the road. You get pulled over, you pay the fine to the court, and you think, okay, done and dusted. But man, that mindset, it's incredibly dangerous. Because the real cost of a violation is almost never the ticket itself. The real financial bleed comes later. It hits you right when you're doing insurance renewals, or when an underwriter is scrutinizing your file, or maybe a carrier is deciding whether to approve you, or a company's weighing whether to hire you at all. That one ticket literally echoes through your entire career. Actually, let me just shatter that just one ticket illusion right now with a real-world example from our source data. $5,000. Check this out. An owner-operator got caught doing 18 miles per hour over the speed limit. Just one stop. But at their next insurance renewal, their premium didn't just tick up a little bit, it absolutely exploded, going up by nearly $5,000 for the year. That is pure, hard-earned profit completely wiped out, just because of a single decision to push the pedal a little too hard. One ticket became intensely expensive. So, let's move into Section 1, the underwriter's lens. We'll look at exactly how insurers predict future risk. To really get inside the underwriter's head, we first need to define what they're actually looking at. Your MVR, your motor vehicle record, is your official driving history report. It tracks the whole shebang: tickets, accidents, suspensions, any CDL issues. But I want you to think about it the way an underwriter does. To them, it's your ultimate driving reputation in the industry. Insurance companies basically use your MVR as a crystal ball. They price your insurance based entirely on risk, right? And statistically speaking, a driver with violations on their MVR is just way more likely to cause future accidents, file claims, and generate lawsuits. Simply put, to an insurer, your past behavior predicts their future losses. Now, you might be wondering why commercial insurers are so much more cutthroat than your standard car insurance providers. Well, think about it. If you make a mistake in your personal car, it's usually just a fender bender. You know, a crushed bumper, maybe a few grand in property damage. But commercial trucking claims? Entirely different beast. We are talking about 80,000-pound vehicles here. One accident can mean total cargo losses, massive multi-vehicle pileups, severe fatalities, and basically business-ending lawsuits. The stakes are just exponentially higher, which is exactly why underwriters evaluate CDL drivers with such extreme aggression. And those incredibly high stakes lead us directly to this pretty staggering figure: $10 million plus. This right here is what absolutely terrifies insurance companies. Unsafe habits and speeding in a commercial truck significantly crank up the severity of injuries and fatalities. And in today's legal climate, that leads to what the industry calls nuclear verdicts. These are lawsuits where jury anger and settlement pressures result in payouts blowing right past that $10 million mark. Plaintiffs' attorneys will ruthlessly argue that a company knowingly kept a risky driver on the road. So yeah, that's the nightmare scenario your insurer is trying to dodge when they spot a speeding ticket on your record. Moving right along to Section 2, the most expensive violations, we're going to cover exactly what terrifies insurance companies. So what specific red flags are these underwriters actually hunting for? Let's count down the absolute worst offenses, starting with preventable accidents. Even if the cops didn't issue a ticket, an accident drastically alters your risk evaluation. Next up is distracted driving. Cell phone violations are huge right now, mostly because distracted driving lawsuits are just exploding nationwide. Then we've got excessive speeding. We're talking 15 miles per hour over the limit or speeding in a work zone. This basically screams to the insurer that you lack judgment. Moving up the severity scale is reckless driving, which is a massive red flag signaling really dangerous behavior. And finally, the absolute catastrophic violation, a DUI. A DUI almost always means outright rejection for coverage, zero driver approval, or premiums that are so sky-high they'll literally force you out of business. Let's anchor this financial risk with another real-world example from the data. Take a driver who originally paid $19,000 annually with a squeaky clean record. Over the course of a single year, this driver picked up just 2 speeding tickets. Nothing crazy, right? Well, at renewal, their premium didn't just edge up, it rocketed to $36,000 a year. That is a $17,000 penalty for 2 mistakes. This kind of renewal shock happens constantly in trucking, and it will completely rewrite your business's profit and loss statement. Oh, and if you think you can just kind of hide a ticket until your yearly renewal, Yeah, think again. Insurance companies monitor MVRs continuously. The old myth that an underwriter only peeks at your record once a year is completely outdated. I mean, sure, they review it annually, but they also look before any policy changes, immediately after an accident, and increasingly, large fleets and insurers are using software to monitor driver records continuously in real time. Literally, the moment a violation hits your record, the clock starts ticking on your premium increase. And it's important to remember that the consequences of a bad MVR don't just exist in a vacuum, they create this massive ripple effect. For instance, new trucking authorities already face incredibly expensive insurance. But you add a poor MVR to a new authority, the premiums become absolutely brutal. Or, in a fleet setting, literally one single unsafe driver can inflate the insurance costs for the whole fleet, which forces owners to fire drivers immediately rather than face rate spikes. And here's a little detail a lot of folks miss. Tickets in your personal car, your pickup truck, or even your motorcycle, those count against your CDL insurance pricing. Plus, young or new drivers already face higher baseline costs because they're statistically riskier, so a clean MVR is even more critical for them to establish trust. Let's transition over to Section 3, your total risk profile. This is all about looking beyond the MVR. To fully understand how insurers view you, we have to look at the broader equation. It's your MVR plus your CSA scores that equals your total risk profile. So your MVR is your ticket history, right? But the CSA, which stands for Compliance, Safety, Accountability, that tracks your roadside inspections, safety issues, and operational violations. Insurers feed both of these metrics into their predictive algorithms to judge your overall safety as an operator. It's like a giant puzzle they piece together. So what actually hurts your CSA score? Well, insurers heavily penalize common violations like breakout of adjustments, hours of service logbook issues, driving on bald tires, poor load securement, and honestly, even simple lighting defects. To a computer algorithm, a driver who constantly fails inspections for bad brakes or sloppy logs is a driver who just doesn't care about safety. And a driver who doesn't care about safety, well, they're eventually going to cause a massive claim. And this brings us to a really fundamental truth of trucking insurance. Risk patterns matter way more than single tickets. While one tiny, isolated mistake might not completely destroy your rates, repeated patterns, they absolutely terrify underwriters. If they see a pattern of repeated speeding, combined with multiple failed inspections and constant roadside violations, the predictive modeling algorithm flags you as a high-risk anomaly. Patterns prove to them that the bad behavior wasn't just a fluke. It's your standard operating procedure. And if you do establish a bad pattern, the financial punishment lasts a very long time. Depending on your state rules, insurer guidelines, and the severity of the offense, a mistake like a reckless driving conviction is going to haunt your premium for 3 to 5 years. Just imagine that. Imagine paying an extra $5,000 to $10,000 every single year for half a decade, all because you lost your temper in traffic one afternoon. It is a long-tail consequence that can absolutely suffocate a small trucking business. That leads us to Section 4, protecting your financial future. We're going to talk about safe driving as a financial strategy. So, how do we actually protect that financial future? You absolutely must avoid these common pitfalls. Number 1, ignoring small tickets. They accumulate so fast and build those dangerous risk patterns we just talked about. Number 2, speeding to save time. Anytime you think you're saving on a load is instantly wiped out by a $5,000 premium spike. Number 3, not fighting incorrect citations. Look, some violations are absolutely worth challenging legally with a transportation attorney rather than just paying the fine and taking the hit on your record. And number 4, ignoring CSA problems. Keep your truck maintained. Those inspection failures will hurt your underwriting just as much as a moving violation. Because listen, if you fail to manage these mistakes, you're going to be forced into the high-risk market reality. Standard insurers will simply refuse to cover you. And once you're pushed into the high-risk, non-standard market, you are facing massive premiums and huge deductibles that you have to pay out of pocket before your coverage even kicks in. Plus, it's generally much weaker coverage anyway. Worse yet, after enough violations like multiple DUIs or severe accidents, you become completely uninsurable. And without insurance approval, you legally cannot operate commercially. Literally, your career is over. But hey, the inverse of that grim reality is this. Safe driving protects long-term profits. Insurance companies genuinely love experienced drivers with clean records and low violation histories. By driving defensively, avoiding speeding, and keeping safe following distances, you're actively helping your carrier lower premiums, improve renewal terms, and build really strong underwriting relationships. Your clean MVR is a highly valuable, highly profitable asset. I want to leave you with a provocative question drawn straight from our source material today, and it's something every single driver should ask themselves before putting the truck in gear. Is speeding to save time actually worth the long-term cost? When you truly grasp that your MVR is your financial risk profile, the answer is pretty obvious. Protecting your driving record isn't just about following the law, it is quite literally the best business decision a trucker can make. Keep your record clean, protect your profits, and stay safe out there. Thanks so much for joining me on this explainer.